Good evening, everybody. My name's Steve Goodey. I'm the guy in the little box here with the box under me. Is Shane Carruthers up there in Auckland. How you doing, Shane? Good to have you.
Hi, everyone. Thanks, Steve.
Hey, thanks, everybody, for jumping onto the webinar tonight. I'm actually really excited about this one. We've spent a lot of time and effort on this, but we will do some housekeeping first. If you've never done a webinar software before, the StreamYard software allows for you to put comments in and everybody can see them. So you can see them on the right-hand side of the screen there. Well, I can see them on the right-hand side of my screen. Don't know how you're set up, but they should be there. Keep an eye on there because we're going to be putting some links in as we go along as well. Now, just a quick disclaimer, as you would absolutely imagine that we would do. This information is not individual financial advice for everybody online. There's about 500 people online tonight. We're a large group, so I don't know exactly what your financial situation is, so I can't give you individual financial advice. So this is of a group nature. We're going to show you some deals. We're going to show you our personal opinion of these deals. We are not registered and licensed financial advisors. Let me repeat that. We are not registered and licensed financial advisors. This is our knowledge and our information from what we understand from where we sit. Please do your own due diligence on any property purchase before purchasing it. We have done some, but you need to do your own. All right. So the housekeeping, your exits are here, and no, I think we're good. You know where your house is. Tonight, I think, is not about education, although I'm going to talk to you about some stuff up front. It's more about decisions. Now, we've got 5 really cool properties to show you tonight, and there's 500 people registered, or just a little over 500 people registered on this webinar. So I've quietly in the background done the maths. There's not going to be a deal for everybody. So have a look, tell us what you think, bang it in the comments, take some action, and let's do some stuff tonight. Now, when Auntie Jacinda told us all that we had to buy townhouses, we all kind of did. And I think that the 2020-21 purge of townhouses are still rolling through the marketplace. And I speak to so many people every week who have bought one, regret it, and it's been a cash flow hold on them. And, we kind of all did what we were told to at that stage. And so this is kind of where we ended up. So the reality check is that not only townhouses, but a lot of other people's properties within their portfolios have had a reality check in value over the last couple of years. And we know the story. It's a cash flow crunch. Rising costs, stagnant or lowered property values have got some people in a pickle. And you might hear me say this more than once tonight, but cash flow creates resilience. Cash flow fixes most of the problems that your portfolio might have. And there's a Band-Aid effect, the Band-Aid thing. And I talk about this a little bit on my page, but simply pulling the Band-Aid off and selling that negatively geared property, or that one that's dropped in value massively and is hurting you, may not be the solution that you think it is. It's frequently seen as the answer, but it can really, really hurt you in the wallet. And trust me, I understand. I don't know if there's anybody that talks to more people with property portfolios than me. And a lot of these people, they want a solution, they want to fix. And the people who don't, they just want to do better, which is fine. And I understand that as well. So holding out basically creates debt equity. And often you just don't catch up in that debt equity because it might have gone down 100 grand in value, might be costing you a couple $100 a week. And to get back to zero might be many, many years. And then for those townhouses then to catch up to the rest of the market is sometimes just unachievable. And the reason I say that is because if a property developer buys the section next to you and builds 20 townhouses on it and sells them all profitably, that developer's just going to buy the next section over and do it again. And they're going to flood your market with more product. And this is why I'm a huge proponent for one-off property deals that can't be replicated. And that's exactly what we've got to show you this evening as well. And many investors just feel stuck as the market's shifting. The market is, by any account recovering to a degree, and it's going to come back. It's a cycle. We all know this. And people don't want to miss out. People don't want to be stuck for the first 4 or 5 years in the property cycle, waiting for their portfolio to recover so they can then start buying some more stuff. And so hopefully we're going to show you some deals tonight that you haven't seen before that are amazing, that are, actual true cash flow positive deals. And I think a lot of you have seen on my page me give the media and a lot of property real estate agents a bit of grief for trying to show something being cash flow positive where the numbers were just a lot fudged. And, we're just not having it. We know the easiest way to sell a property: increase the rent to an unachievable level, decrease the costs and expenses to an unmanageable level, and make the thing look better than it actually is. So, trying hard to push back against that generally and tonight as well. So this is how we do it. We fill the gap. A market response. Investors are shifting their focus from speculative growth to assets with actual cash flow, because we haven't had growth for 3 or 4 years. We may not have some for a little while longer. Now, I think I know where we are on the property clock, around about 7 o'clock, round about the very, very start of the recovery. But I don't know how fast we're going around that property clock. So putting some cash flow in your portfolio is always a magnificent idea. So we're looking for high yield properties at the bottom of the market. And there's heaps of them out there and they're readily available. All you've got to do is spend 8 or 9 hours on Trade Me every day and spend months and months on each one and babysit some real estate agents, and you'll find cash flow positive deals. Or you can come and have a chat to Shane and I, because we've got some. And this is the trend we're seeing, and this is the comment at the bottom of this slide. This is what I'm seeing an awful lot. I had a very successful client recently. He's got a great portfolio. He's got one property that's $200 or $300 a week, cash flow negative. He can't sell it. He doesn't want to pull the Band-Aid off. He doesn't want to focus that loss. And so he came to me and we found him a property that settled very recently, up and running, fully let, fully managed, which is $300 a week, cash flow positive. So he's got a negative one, a positive one. He's got 2 properties together in his portfolio now, and that's going to work and that's going to survive. So that's going to work a lot. And some of you, don't get me wrong, don't let me presuppose for you. Tell me in the comments if I'm right or wrong here. But I do feel like a lot of people sit there and go, what's the catch? And that's a good question. It's a question you should be answering. And that's a question that I look at, and I know Shane does too, which, by the way, I'm going to let him speak in a minute. I promise I'll slow down. So the catch is one thing that Shane and I are always looking for when we're looking at an individual property. And we look for it in every single deal. What's wrong with it? What's right with it? Would I own it? And that's the test that anything we bring to the public has to pass as well. Would I own it? Would I put it in my portfolio? So my job and Shane's job tonight is to show you where the risk is and tell you whether we feel that risk is acceptable. That's the litmus test. And I'll say it, right? I've been in property investing for 30 odd years now, give or take. I've never met a property investor yet who has too much cash flow. It's just not possible. Cash flow makes everything better. So let's have a look at some deals, shall we? Shane, would you like to tell us about this bad boy? Over to you. And he's talking and he's got himself muted. Can't hear you, Shane. Got to love live webinars, right? He was all chatty Cathy a minute ago. Can't hear a thing now. Come on, Shane. Get your audio sorted, mate. Nope. I'll let you know when I hear you, though. He's losing the headphones. He's working on it. Oh, there you are. I can hear you now. You got to sort it through your laptop, have you?
Yeah. Can you hear me there?
Yeah. Quality's fine. Go for it, mate. Tell us about this one main road.
Yeah, so what I like about this one is obviously it's a set of 12 units. And
it's a village.
Yeah, it's big. It's big. You got 6 1-bedrooms and 6 studios. A mix of conditions. Some have been renovated, some have been fully renovated, and some are reasonably original, but obviously Healthy Homes compliant. In good nick, 50 shades of beige inside.
Love it.
But functional. They're not all in just one big building. They're sort of separated into 5 different blocks, which I think is ideal and will survive the apocalypse.
Yep.
Because they're brick outside and an easy roof and concrete floor, so they're pretty straightforward. They sort of have a blend of $320 to $350 a week rent. Got roughly 500 square meters of floor area total, and it's on a 2,000 square meter freehold site. If you borrowed the whole purchase price 1,690 and you did interest only, 100% lending, less your rates, insurance, property management, etc., you'd cash flow about $1,200 a week. So just with that one property, you'd have cash flow of $1,200 a week. And when you do talk about deals that potentially people are like, that's too good to be true, it's often why people don't buy these, and someone else does, and then they complain that they can't find a deal. But we've done the DD on it. It's a solid deal. You will have the odd vacancy here and there, but at least you've got 12 units to rent. So yeah, I like that deal. It's a good one.
And let me do the cheesy auctioneer spiel, right? How many of these have you got? Just one, right?
Yeah, look, they do pop up, these type of bigger units, get a bit older and get into their 70s and they want to retire, they want to reduce mortgage debt. They typically don't turn up with people needing to sell them, because they just, like you say, cash flow fixes everything. So typically they ain't selling these because the cash flow is so good that there's not really a reason for. And that's why this vendor's selling, is he just wants to do other stuff. So he's just reducing his mortgage debt. Yeah, so I like that deal. It's cool. It's
and based on being at the bottom of the interest rate environment too, you could literally get that cash flow and fix it for 3 or 4 or 5 years and lock in that cash flow and just sit there.
Yeah, an alternative, if you had like $1 million of cash or something sitting in the bank and you got a $600K mortgage, I mean the mill's gonna perform a lot better with this asset. And like you say, lock it in for 5 years. Just treat it as just a solid thing. Don't play around with everything. Property manager's awesome. Knows all the tenants by names. Well managed, so it's very hands off. Yeah. It's obviously not in the main centre, but sometimes that's just what you got to do to get the cash flow, and you will still get capital growth from it, because I imagine the original owner of this paid $20 plus a packet of cigarettes, so they do go up in value, contrary to what people think. Will they go up as fast as Auckland? Who knows? But it's hard to hold an asset in Auckland because the rent doesn't stack up.
Yeah, and that's the thing too. I mean, this property is just, it's in Gore in the lower South Island, and it's not going to sell to somebody local. This is going to sell to somebody in Christchurch, Wellington, or Auckland who can't find 13.5% yield and wants to put something chunky in their portfolio like that. I love it. It's a great asset. Yeah.
Seldomly available, this type of stuff. Yep.
Very seldom. And, we've dealt with this vendor before. We've worked quite closely with the property managers on this. It's a cracking good deal. And, here's some of the photos, obviously. Let's be realistic. They always send us the photos of the ones that are renovated. So this is a nice looking unit within the complex. But we're talking hardy materials and long-term asset,
Even the other ones are not. They're not bad. They just are beige and would have some stories to tell. But they're still solid and functional. It's just whether you work out whether the investment of renovating sort of one every year or so, the rest of them, if that's going to give you a return insofar as a valuation uplift or a rent uplift, then you do it. But if you're not going to get either of those things and you've got a tenant in place, it probably doesn't make a lot of sense, because they, like I say, once you get something to Healthy Homes, they're in pretty good condition because the rules are reasonably tight now. So yeah.
Yeah, that's the trick. Getting it to healthy homes at the very least is a minimum. Now, guys online tonight, like I said, there's 5 deals we've got tonight, and there's a lot of people online. So the call to action, if you like, if you're interested in one of these deals, we're taking registrations of interest and sending out information packs. So we've got a lot more information on each of these deals, obviously, than we can show on a couple of quick slides. And we know that you're going to want to have a think about these things, but they're going to move really quickly as well. We can't, it's really hard to find cash flow positive. All of these deals are, and they're in the cash flow positive in a fairly healthy way. So what we're going to do is we're going to put a link into the comments after each deal, probably bang it in there now. Boom, look at that. How good. I just wave my finger and it happens. Now, if you click that link, it will take you to Shane's website. And on his website, it says, get info pack for this. If you click that button, it will pop up an email, which you hit send on. You don't even have to put a comment in. And Shane, after this webinar, will send you all of the info pack information on that particular deal that you're interested in. And then we'll get in touch with you tomorrow, have a quick conversation, roll through, figure out who's keen, and we'll make this thing work for you. We're here to do deals. We're here to find good stuff. And I kind of consider Shane and I to be somewhere along the lines of your mortgage broker within your team. We want you to buy a deal. We want it to be so good that you can recycle, get more equity out of it, come and buy another one off us. So we want these deals to be cracking good deals as well. So that link is now in the comments for this deal, which is 71 Main Street. Click on the link, click on get further information, send the email to Shane, bang, it'll pop up. You'll start to see them coming in. And we've actually got 3 lots of information for every deal. We've got the basics, some photos, and then some cash flow numbers. So this is the actual cash flow numbers on this particular one. The rent coming in on this is a staggering $225,000. Bear in mind, this isn't an estimate or an appraisal. This is actual rent being received at the moment. The mortgage about 76. We've got property management in there. This property's got an extraordinarily high rates figure, and this one always shocks people. $46,000 worth of rates, but it's 12 properties as well. It's a village, and the thing pays for it. So who cares? Insurance, $11,000. Once again, not an estimate. That's actual. You might even be able to do better yourself by requoting it. So it's positive by nearly $70,000 a year, or $1,300 a week. Gross 13.8, nearly net nearly 8.5%, or just a little over 8.5%. By all means, a fairly flash deal, got to say. It's perfect for the right investor. Like if you've got a few bucks, you're rolling around Auckland and think 4 or 5% is decent. Yeah, we've got some surprises for you tonight. For sure. Any other thoughts on that one, Shane?
Yeah, it's a great deal. Ignore the rates. Once you get your heartbeat back to normal after seeing that, it works just because it's an OPEX figure inside of it. It was producing $250,000 worth of income, then that's why. So yeah, you could probably find something that's $10,000 or $11,000 worth of rates, but they're typically not delivering $250,000 worth of it. So yeah, I know when I saw it, I was just like, is there an extra number here? But yeah, if you divided that by 12 units, it probably still was too much, but that's just what was, you can't get everything on the deal. And you just lock it in, and maybe, I don't know whether you become the mayor as part of that rates package. Potentially.
Join the city, yeah.
It's something, yeah.
And the flip side too is the higher the net yield, the more likely you are to be able to get a valuation at a lot higher rate than what you've actually purchased the property for. And obviously, as we know, if the valuation can go up nice and high initially, you're more than likely to be able to recycle a lot of that equity back out again. Because, Yeah,
I spoke to Aidan, the valuer who values this Southland stuff. He's already the guy that you'd get to do it because he knows them all. He valued the D Street one. And he said, look, it's going to be a similar cap rate. It's going to be a similar yield figure. They all sit around that sort of, 11, 12% gross. So if this is 13.5, probably higher. So look, it may well value to a couple of $100K more than that on paper. So at least you've got an uplift there. And there's also the option to look at increasing rents over time. You know, 20, if you do even $10 times 12, it's going to add up. So yeah, that's all good. Yeah.
What's the pinging there? Shane, is your email going off?
I don't know. It's getting, I'm starting to get a nervous twitch. Yeah.
No, you're getting emails. People are inquiring about it. Boom.
I think it sounds like it's, I've made that up, but it could just be mum texting me. Who knows?
No, that's brilliant. I know this took a long time to negotiate, and you've become best mates, and you're going to the Christmas party for the vendor just on the effort it's taken. So well done with that deal. I think that's a stunner. It's a higher price deal than a lot of people look at, but it's the higher yield than most people look at as well. Excellent. All right, well, let's move on to the next deal, if you like. This is the Palmerston North one. You want to walk us through this as well?
Yeah, so full site. It's actually quite big area. You got sort of 250 square meter 6-bedroom house at the front, and then a standard sort of 76 square meter 2-bedroom minor dwelling at the back. $1,270 per week rental, 7% yield. 320 square meters of floor area total, and sort of 8 bedrooms across the whole lot. What you could do with that is obviously you could add some more value with fencing and bits and pieces, or if you had the appetite, you could do the 2-bedroom as a standard rent and then do a rent by the room, which works really well in Palmerston North. And you might get a couple of $100 a week rent off that, very conservatively. So you're getting $1,200 plus the sort of, so you might be able to get $1,900. Not for everyone. Some people might and run it as it is. So just a good solid yield. But what you typically find when valuers revalue stuff is, unless it's extremely high rent, which is the previous one was, and they'll use cap rate because there's nothing comparable. With a property like this, they'll probably just use the square meterage of the dwellings, and you've got 326 square meters. So it's a lot. Typically, they're valuing like 100 square meter estate houses. So It just helps them to push the val up and reval. So, yep. So that's a cool deal. Good location. Ready to go.
Yeah,
and tidy.
Nice having a 2-bedroom unit at the back, and then having a big mammoth 6-bedroom at the front. You could kind of aura that. You could Airbnb it for sports groups, which Palmy has heaps of. You could, as you say, boarding house it if you wanted to as well for a higher return. Decent, solid, big piece of land, lots of house on it. What else could you ask for,
Yeah. So like I say, the most obvious thing is a fence would add value from day one. So, good deal, good location. Yields okay, still cash flow positive. So, I like that one.
All right, we'll bang the link up for this one as well. This is the Palmerston North deal, one of them. And if, as I said before, if you click through to that link, you'll go to Shane's website, Cashflow Property, and there'll be a tab there that you can hit to get an info pack on this particular deal and more information. I do like this one. It's very, very clean. The photos look amazing on the inside. It doesn't look like there's too much to do. It looks to be in fully rentable state. And I think from the info pack the back one is already rented and the front one's just ready to go.
Yep.
Nice.
Yep.
And once again, we've got some more detailed numbers on this one for analysis. Market rent $66,000. 41 would cover your mortgage. Property management's in there. Rates, way more acceptable level of rates. Bank some insurance in, so you got about $60,000 worth of costs, about $6,500 positive cash flow, and that's just as a fairly normal rental with existing tenants in the back and the rental appraisal on the front one, giving you about $124 a week out of this in pure cash flow. So we're grossing 7 and netting 5. And it cash flows a bit, which is nice, with a lot of add value, a lot of upswing in that one as well. So stoked with that. And as I said, that you'll see in the comments there that link is there for Shane's website for you to show your interest and grab the information back on that. Obviously, you're not committing to buying it instantly. That would make our lives too easy. But you get a whole pile more information. Have a good read through that, and we'll have a chat tomorrow. Excellent. You ready for the next one, Shaney? Let's go. This is a castle. Let's be fair, right?
Yeah. So with this deal, it's got a couple of things going for it. One, it's a corner site in a city residential zoning. So in the future, someone's going to build something massive there. You got 2 road frontages because of the corner site. So it's going to be helpful. And then you've just got, basically downtown Abbey house in the middle, which is 780 square meters of house, not land. 780 square meters of land. There's actually 30 bedrooms in there. 25 of them are being used as a rent by the room, which is different to a boarding house. I think the boarding house sort of connotations of like just sort of drifters who come and go, but with the rent by the room, it's really just you've got the rooms. People need just a room. This sort of standard tenancy agreement with the same bond and everything, but they just use the common space. It works for them because they don't need to come up with $600 a week rent. They might not know anyone. They just want a room, have the computer in there. Could be students, but not always. You could just have young professionals or just, even people my age, often different stages of their life. That's all they want. So the current rent is $4,615, and they've only just sort of started doing this in the last couple of years. So when you're starting off with 25 rooms to rent, you probably just take whatever rent gets offered, and then you start getting closer to the end and you take market. So I would pick that market rent as probably closer to that 5.5. As you recycle through or increase, you can get to that 286,000. But the numbers work at the 240,000, which is current. But a lot more expenses with these types of properties, just because you've got a property manager beyond 10%. There's a lot more to control all of the people in there. And you do provide power and internet, which would be a substantial amount of money with this, but not as an OPEX compared to your $250,000 worth of rent. It might be sort of $26,000 worth of power and internet. Healthy homes all ready to go. So that's 1860 plus GIS, which is about 2,150 inclusive. So depending on how you purchased it, if you bought it as a GST entity, then it'd be 0 rated. And if you bought a residential investment, which most people I think would, it's about 2,150. I haven't done the maths in my head, but it's roughly there. And that would be $2,000 a week cash flow positive. So $2 million and $2,000 a week cash flow positive, and that will work really well. Just that location, you're just always going to have tenants. The hospital is almost complete. There'll be a lot of staff there that is just around the corner, and they just want a room to rent. Doctors and nurses, going to be heaps more staff. You could either go and get them yourself, or you could do a head lease with the hospital, and they might take all 25 rooms for $250K, and then you don't need to pay for power. You don't need to have a property manager. And there's heaps of other businesses around there. So there is other options. So if you don't have an appetite for the rent by the room, I think it's a great strategy. But if you can't get your head around that, go to the hospital, get a head lease signed, and get them to take 25 rooms or 20 of them or 15 or whatever, and just land bank it, because the location is optimum with this one. Yeah.
And what's the condition like? Is it rough inside? Does it need
work? Pretty rough. Yeah. There's probably some bits of rot holding hands here and there, but they're pretty sturdy, these houses. So it depends on what you want to do. Like if you wanted to go on and just get everything back to perfect, it wouldn't make sense. But you could just tick over on it with your cash flow. But there's nothing that's immediate. But it will require some maintenance over the next 10 years, just because it's just old, but it's functional. That's a good example. It looks like the Titanic coming down the water down the bottom or something, but it's just a massive 780 square meters of building. It's nuts.
And then who's renting it at the moment? Who are the tenants in there? They're not all students or something?
It's just a blend. A blend of young professionals. There'd be some people that are sort of older that maybe divorced and then they need somewhere to go, or There's some younger people. So yeah, it's just a blend. So you can run any strategy. If you just wanted to put students in there, you could, but then you're really recycling every year with rent by the room. A lot of them, you own some of them they've lived in there for 10 years. So it's not like there's turnover.
My longest running one is 9 at the moment. Yeah. I wouldn't know where he would go to live if he wasn't there. And they just find their own equilibrium, They love it.
They like it. Yeah, it's cheap for them, and they're not going to use a full house. They're okay they've got the common spaces. I know you had that Central Wellington rent by the room, and you put a beautiful kitchen, and no one used it because they just went down to Cubitt Street and ate at the meals. Yeah, so sort of could have put another bedroom in there.
And the thing is that, like, a lot of people think that Dunedin is all about these sort of properties, but, Castle Street and some of the rougher student accommodation blocks, they stop people from being able to do boarding houses like this because everybody just goes straight for student accommodation. And having this is an absolute gift. I mean, I would imagine a social housing provider, or as you say, the hospital would be all over this.
The Hoppers Hospital was the move because it's going to be very good quality tenants. And the fact that they can just walk home after work and go to sleep or on shift work and stuff, it's optimum. And then, in between they can, because they're so central, they've got access to the city. So I think that would be an amazing strategy.
And getting some interesting questions here. If you run Airbnb on the block, can I claim GST?
Yes.
Or pay no GST? I mean, you can claim GST on the purchase anytime you like, for any reason you like. Having GST in there as a strategy is something that you want to talk to your accountant about, obviously, but that can absolutely be done. It'd be interesting with 25 bedrooms to furnish them, put it on Airbnb for sports groups going down to Dunedin. Where else could they get bulk accommodation like that? You'd get $3 or $4 grand a weekend just doing that. There'd be some real interesting stuff there. And as I said, the link at 35 for this is
Alva. Yep.
Alva, not Ada. The link is coming. That one's the link for another. There we go. Alva. There we go. So the link is there now. Bang on the link. Send us more information. Send the email along, and Shane will send you the info pack. He's got nothing else better to do. He's going to sit there all night answering all of your questions, throwing daggers at me. So let's look at the numbers on this one in a bit more detail. Market rent, $270,000. That's at 5.2 a week. As we said, there's a lot of upswing in that. You could monkey around with that. And we've got good management in place in Dunedin. So once again, I imagine that the purchaser for this will be an out-of-area purchaser. There's a lot of those for these types of properties. 80-odd grand for the mortgage, decent amount for property management to get that up and running properly. Rates, normal amount for a massive house. Insurance, same. Wi-Fi, power, internet quoted there. Now, obviously, that goes up and down as the property gets full or not. Cash flow positive by over $100,000, well over. So, you're looking at $2 grand a week cash flow coming in off that. And I challenge anybody to find something, with that much. We're talking a net 10%. That's just nuts. People, if I posted that on my page, people would just be like, no, you're full of it, Steve. Like, a net 10% is holy grail territory. And this is why, like I said about townhouses earlier, we've only got one of these, and we've highlighted it, promoted it to a lot of people tonight. So this will go. So jump on there and do a hit the button, do the interest thing, and let's find a home for this bad boy, because that's just too good to waste. That constitutes most of a portfolio of 5 properties in Auckland, but just with way, way better cash flow. And this is where the money should be going, to be fair. Let's go. Interesting question there. What would be the risks with this property? To my mind, you're buying one very, very large property in a place, and the type of buyer that's going to buy this place probably has a medium-sized portfolio already in another city. So what you're actually doing is de-risking by being across 2 different cities. Let's be fair, if you've got 25 rooms to rent and there's already tenancy in there, your risk is occupation, but there's bugger all risk of 25 people leaving the property all at the same time. In essence, you're taking risk away from your portfolio by cross-contaminating your market with other stuff. Banks are going to look at it in an interesting way. They're not going to lend on it the same way they would for a 3-bedroom house in a normal suburb in a main centre. But, you know, that's why you get a 10% net on this and you don't on those other properties, you know. The banks will look at it in a more commercial nature. They might make the loan term slightly shorter. It might not be 25 or 30 years. It might be 15 or 20 years for the loan term, which means that it might eat some of the cash flow that you're earning to repay the loan faster. But let's be fair, if it's paying itself off at $100,000 a year, you're going to be debt-free quicker and your cash flow is going to come up really, really fast. And that's what I love about these really high cash flow property deals.
Yeah, I think it'll be. I think the bank would class it as a commercial lend, but they would give you residential lending.
Yes, the residential interest rates.
You need a very experienced broker to get finance on this, so this is not for everyone. If you need help with that, we can put you on to our guys. But yeah, it would be. It's complicated, but it can be done. Yep.
Absolutely doable. Yeah, and I mean, as you say, Shane, if anybody's sitting there with $1 million sitting in the bank getting, 3% less tax with no capital gains on the back of it, 10% net looks like an absolute gift. Absolute gift. All right. So let's move on to this next one. I know you've spent a lot of time and effort working on this one. Tell us about the Gisborne deal, Shane.
So this would be like if you went to a seminar and they were talking about multi-income with subdivision potential, they would put this aerial up because it's just exactly how you want it. Houses to the front and to the left or right. You got a driveway to the back. You got the minor dwelling there. They've already done a feasibility report through a reputable company that has done subdivisions in the street and in that location. So they're saying it looks like green lights all the way. Disclaimer is potentially. So you still need to get sign off, but it's not obvious, like there's no infrastructure in place. Your height to boundary, all of that is fine, but you still need an approval. It just looks like it meets all the metrics, which is typically means that it will approve and go through. But that would be a long-term thing. In the short term, it's just 2 dwellings on one site, which is kind of what you want. This is a much lower risk deal. Banks would lend on this. This is no issue at all. What I like about it is that it has had a renovation and a modernization. Reason I use those words is it's not, I can't guarantee that every inch of the house has been fully renovated. It's not brand new, but it's been modernized. It's Healthy Homes compliant. And there's tenants in place that have obviously just moved in because the renovation was only just completed recently. $12.85 a week, 8% yield, locked in, $300 a week, cash flow positive. This is just a straightforward deal. I would happily have this in my portfolio. There's sort of not much advantage to trying to find something like this that's unrenovated because it costs so much to get it to this level that if you could find this not done up, you sort of end up in the same position quite often. And people don't have the experience or the tradesmen all the time often to do this. So this kind of ends up where you'd end up with it if you did it. So that's what I like about it. And tenants in place, so it's a real yield. The yield's 8%, which is great. Some people were saying they want more. Well, you will get more because your purchase price doesn't change, but your rents will go up over time. So in 5 years' time, you potentially have a 10% yield. You could also add a couple of cabins to the back to turn that into a 3-bedroom, convert the garage. There is room to convert the main dwelling into a 4-bedroom. I wouldn't recommend that. It would make sense on a spreadsheet, but I think the tenants would. It's not big enough. It's like 110. It's 110 square meters. So unless they're going to have one seat in the lounge, I don't think it would be optimum. But it's a great deal. I know who's renovated it. He's a great guy. He's done a really awesome job of it. And it's ready to go. And in a good location. It's not sort of high-end location, but it's certainly not lower socioeconomic. It's sort of in the middle there, tidy neighbourhood. So yeah,
like you and me have both done this. We've both bought a house and put something on the back of it, or whatever, and this is just one sitting on a shelf that's just ready to go. And honestly, for another out of town buyer, there's actually nothing to do. This is fully tenanted, fully managed, under control, running. And all you're doing, if you want to do the subdivision, you don't have to, but if you want to add some value over the next 12 months, it's really just paying a bit of money to a surveyor and sitting there watching the paperwork fly back and forward and getting it done quietly while the tenants are sitting there paying you $300 a week and cash flow positive.
Yeah, like I say, if you bought something that didn't have a second dwelling, and you did it, you'd end up at the same amount. It's a false economy, so you might as well buy that. And what also with the subdivision, unless you're going to be selling them off, it doesn't make sense to title it because your rates are just going to go up. But typically what happens if you can get the feasibility report to be solid, or take it to the point where whatever it is it 221 or something, or 223 or whatever, we haven't done the reserve contributions in that, then that could be a good idea, because you give that to a valuer, and they will use that to value the property for higher. So you get the advantage of that. But it's probably not something I would pull the trigger on. I've done this exact same thing with a property of mine, and the maths doesn't really maths. You might as well just buy it done. There's a lot of work, a lot of time. There is some advantage, some equity uplift doing it yourself, but it's there's a lot of time. This is ready to go. It's real rent. I would happily have this in my portfolio.
Yeah, we've got a question there too. Lena asks, upper quartile 650 for this 3-bedroom. So why is the rent so high? We've got to remember that 1285 is 2 houses for a start.
I don't understand. Why would it be the upper quartile? Because that's what you do. We only rent stuff at the upper quartile. We don't go for low rent. If you're talking about Department of Building and Housing, the problem with that is it's you've got all rents in there. So it's just an average. So you could have some guy that's rented his property for 200 and has never increased it. You really need market appraisal. And if you did have a market appraisal, I'll double check whether we do have that. You would want it to be the high end because it is renovated. It's in good nick. It's ready to go. So you should be in the upper. You should be in the upper quartile.
Yeah.
Sorry,
but this is actual rent too. So this isn't perspective. This is actual.
No,
this is where it's
good quality tenants. So the owner has taken his time to actually get good quality tenants in there, not just filled it to sell. So the only time you'd be outside of the upper quartile is if it needed a bit of work, and which I do own properties like that, but I need
it's nice looking.
It's a nice looking property. Both of them are. And the minor dwelling 6 years with the black sleek. It's a bold move to take, but it looks cool.
Yeah. It's very similar to the Palmerston North deal, really. Older house in the front, and they've put a modern thing on the back of it,
And there's a lot that's being done to it, there's piling and all sorts, like it's, and consents and stuff being done for the back dwelling that weren't done. So the vendors has done a lot of work to get it. It's not a splash and dash. It's not a paint and carpet job. There's, he's really restored this home from needing some TLC. Yeah.
Yeah. The done deal. Yeah. All right. Well, let's look at some more detailed figures on it then. So we've got market rent at 66, which is $1,200 a week. Mortgage about 38, just under the 40 grand mark. Property management in there. Rates and insurance. Management, rates and insurance, all pretty economical. So the property is going to bring in $66,800, nearly $67,000, and cost about 50 grand. So we're $16,500 cash flow positive, which is quite a bit over $300 a week. Yeah. And so we're looking at a gross of nearly 8% and a net of a good healthy 6.5%. And Gisborne's not a small town. There's good people there, good numbers. So we're not talking sort of a tiny regional New Zealand town at all, which is pretty good.
Yeah, no, it's a solid deal.
And as with all the deals, the link to this deal under 183 Crawford Street is now in the comments there. All you got to do is click on that link. As I said, open Shane's page, request info pack, takes you to email, send the email, goes through to Shane. He'll send you all of the information. It was the easiest way we could make this work, trying to make your lives easier. So there we go. All righty. So off on a tangent. Let's go. Palmy deal. Another Palmy deal even. So what do we got here?
This is sort of similar to the Dunedin one, but a diet version. This is a rent by the room, but it's an 8-bedroom. You could actually just rent it out as an 8-bedroom, and it would still probably be neutral. But it's just a heap of, a heap of house, again, sort of almost 200 square meters of house in pretty good nick, ready to go. But these Palmerston North locations, they work really well with a rent by the room. And if you've got 8 bedrooms spread over 200 square meters, they do work. And we're sort of looking at, $190 to $200 a week. So it's not super high freehold site. And that would be, around $400 a week, cash flow positive, 12% yield, call it 11.5. $1,520 a week. Yeah, so it's a sort of similar cash flow property that when you have something that has this many bedrooms, you got two options. You could either just put it into a normal rental pool where you might get sort of $800-900 or something a week, and that's great. But you're going to have the same amount of people living in it and the same amount of headaches. So you might as well just get a property manager that specializes in it and just put, have 8 tenancies, and then you can have the extra $500 or $600 a week, and that's a lot over a year of cash flow. So that's typically how these properties work. Is once you get more than sort of 5 or 6 bedrooms, you got to really consider whether you do the rent by the room or split the house down the middle into 2 units, because the advantage versus the hassle is often works. It doesn't work in every location. Like, you wouldn't do it in a super small town, a rent by the room. It really needs to be central. It needs to have students. Wellington is optimum. Auckland would be optimum. Dunedin's perfect. And Chicago would work. So they don't work in all locations, but they definitely do work in Palmerston North. So
this southern end of Palmerston North, this property is on the drive into town, but you can absolutely walk to supermarkets from this location, which makes it a pretty good location. That piece on the top of the house is actually 3 separate double bedrooms, and there's lots of other house underneath it. This is 8 bedrooms, basing on just splitting a dining room in half from there, and bang, it's 8. But on the right-hand side down that driveway there, you can see a concrete garage. And that's actually got a couple of what the agent calls sheds behind it. And I literally looked at that and went, if you actually spent some time and money in there, it's possible you could turn that into a minor dwelling as well, because they've actually got residential windows on it and a half-decent roof. Obviously, do your own due diligence. Let's have a closer look at it. But there's a lot of uplift you could do with this particular property. And the thing that I liked about it was, for the price point you're purchasing it for, if you put a bit of renovation and a bit of time and love into it, it's actually going to value at a big jump higher than that. So this is my pick of the night for actually being able to recycle your equity in a really, really healthy manner. So as Shane said, nearly 200 square meters of house. We go $1,500 work a rent at 80 grand. The yield's really good. It's got a massive airport. It's got a lot of industry in there. A decent place.
If the valuer used cap rate to value this, which they potentially would, it's got to be a few $100,000 value higher than this. Don't quote me on that, but you don't have 11-12% yield properties in a residential location. You have much lower. So they use cap rate, which is the average rental yield in that location, and they do some maths on the annualized rent, and they take GST off and do all this other sort of magic. But I would imagine it would be a good equity reval. So that's the 2 reasons you do it. One is you're an 8-bedroom house, you can have that many people living in it, you might as well get the rental return from it. But in my experience, most people, when they do it, they get an equity uplift. And I know the properties you've done with rent by the rooms, they go sometimes from 500 to like 1.3 mil. But obviously there's a reno in between that. But the difference is sometimes quite big. Yeah.
And then you can see in that top left photo there, you've got the main house, the 2-story part, and to the left there, that's that garage and shed area. So as you can see, it's interestingly, it's quite obviously got guttering, it's got residential windows and curtains in there. There's something in there we can have a good play with as well. I quite like that one as well. So let's look at some numbers on this. We've got $79,000 a year in potential rent sitting in there, 31K for mortgage. So your mortgage is way less than half of your rent coming in. Property management, rates, insurance, a healthy whack for Wi-Fi cleaning that you can muck around on. It should be cash flow positive. $22,000, $23,000 a year, making it $400 a week cash flow positive. So this one, typical difference between gross and net return is very high. Your gross yield is going to be around 11. Your net is very close to 8% on this bad boy. And as I said, I reckon this is mint with a very, very gentle and small renovation. I'm saying 2 or 3 weeks, $20,000 or $30,000 max reno cost. And this one will actually jump up in value really, really well. Actually a big fan on this house. And I've seen the way that the owners have kept it and furnished it in bits and pieces this week. And, they want this thing sold. And so there's the link is in the comments there as well as the usual story. Click on it, go through to Shane's page. There's a bit more information on there. Click send further info pack, and we'll email all that stuff to you. And remember, guys, once we've spotlighted these deals, we're going to have a lot of interest. We're going to be head down, bum up over Easter, working with you guys through these, and they probably won't be available very, very long at all. And you don't need to be 100% absolutely certain that you want to buy one of these to just show interest and get some information. All you need to be is more comfortable than you were yesterday about putting some actual decent cash flow into your portfolio this week, which we can absolutely help with. And that's what we've got for you tonight, guys. I think that is 5 bloody good deals, and there's actually a really interesting cross-section there. You've got high value done, good value done, medium value done, lowish in entry-level value. I mean, if you're paying $600,000, $700,000, $800,000, that's 2/3 of an Auckland house with a really, really massive return. And there's a lot of ad value available. I think that Dunedin Castle is a really exciting project. And I think that the last Palmerston North one there with a massive uplift in potential valuation as well. And obviously, Shane and I have the ability to offer you mortgage brokers, property managers, and renovations people as well. We have those on tap and available. Lastly, if you're wanting to get the freshest live deals, I know a lot of you will actually be on Shane's database already. There's a link there for getting deal alerts. It's cashflowproperty.co.nz/property alerts. I imagine that most of you have already been on Shane's website this evening and clicked something around there already. You'll see that it's already available there. And Shane also does a bespoke buyers service, cashflowproperty.co.nz/find me a property. And that's where he will specifically work with you one-to-one. You tell him exactly what you're after. He goes and finds it and brings that to you as well. Realistically, quite a stunning service. To give you an idea of the dynamic between Shane and I, we've been bloody mates for 20 years and we love working together, and we work on this stuff pretty much all day, every day. So I'm on the deal alert side. I'm finding stuff and giving it to Shane. Shane's introducing it to buyers and finding homes for it. And Shane is working on the bespoke side, and he works one-to-one with certain clients, not everybody. So he'll probably give you a quick interview and ask you where you're at and what you're up to. And if he feels like he can find what you're after, he'll work with you on this bespoke service side. I know for a fact that Shane's got a certain amount of slots available, which more or less equal a certain amount of time in his day that he's willing to work on this bespoke side. And so I hope you won't mind me saying that if you are lucky enough to be able to work with him one-to-one on the bespoke side, then take that by the horns. That is a gift. Awesome. Now, lastly, what I'll say is I'm going to sit here for a little while longer and answer any questions you've got. I don't know if Shane's keen to or not, but let's see how we go. Awesome. To close, there's like 2 options you can basically take. You can watch what happened tonight and come back and do the next webinar with us and be more prepared or more ready, or you can back yourself tonight and take a step forward, click on the deal that really interested you the most, and work your way slowly through the due diligence. We know that being in contact with us doesn't equal a sale. It equals you doing your due diligence and showing interest. We'd love to work with you guys some more and actually work with you through some of these sales as well. So, as I said, I'm going to stay for a bit longer. If you're serious and you're interested and have a question or a message, chuck it in the comments there now. Shane and I will do our best to work through any questions or any interest you have. Obviously, you've got all of the links to show interest in each individual property. Please do that. Have a look at the info packs that we've got available, and we can talk to you one-to-one either tonight or tomorrow, or even through the break if we need to get your property portfolio to a point where you can be buying everything under the sun when the market moves a little bit, which can't be more than, I don't know, God. When do you reckon this market's going to move, Shane? When do you? It's not going to be this year, I don't think. In all honesty, what do you reckon?
It's already moving.
You reckon? Where?
Regions, some of them are out booming. Yeah, it's really hard to get deals, really hard to get stuff. There's been uplifts, 50 grand per suburb. Certain places, Hamilton's super hard. It's gone from sort of 700-800K for a home and income to over $1 million for the same again. So yeah, the regions are booming. Weirdly, the media hasn't picked it up because maybe there's a war going on or a penguin's gone missing this week. But it is. So Auckland, there's going to be a long time before that corrects, at least another couple of years. Certain houses in Auckland will perform well in the locations that people need, and they have limited stock. But if you've got a townhouse, an apartment, it's just a house that's similar to there's 15,000 listings on Trade Me. It's people are struggling to get through that list, so that is tough. Wellington, could that fall back a little bit further? I don't know. I think it's probably about where it needs to be.
No, it won't, Shane.
Yeah, it won't be.
Have a fantastic sale shortly.
I will not. No, I don't think it will. But no, I think certain places are already. I mean, it's not easy to just go, well, I just want like an 8% yield. Just go get under offer. You're in multi-offer situations. They go to auction, they sell sometimes. So, yep, I would say they have been, with this interest rate rise that's just happened in the last fucking 2 minutes, it seems like it's been a decent lift up. So that may well slow things down. I don't know. But I would argue that from March last year till now, some of the regions have had a little increase. Not massive, but it certainly isn't. It certainly would be classed as capital growth. Yeah.
All right. We've got a question here. Can we get a copy of this recording? Will it stay on your page so we can show our spouse, etc.? The software I use records this. We will send it to YouTube and send out a link to everybody that's registered for this webinar, and it will stay on YouTube. So yes, you will be able to show your spouse or partner this webinar. Another question we've had is, are today's rent-by-room properties all legal as boarding homes? They are all legal as existing rights as to what they are at the moment. So yes. That other question I've had, and I'll let Shane answer this one if you like, is Tauranga or Dunedin better to buy at the moment?
They're different. So both great locations. Dunedin would be a more cash flow opportunity. I think you get higher rent there. Tauranga, the rents versus purchase price will be 5 or 6%. You could do a rent by the room in there as well. But yeah, both great locations, but they're kind of just different sort of situations. So if you wanted cash flow, I'd do Dunedin. If you wanted, I don't know if it's a better location, but I mean, Bay of Plenty is massive now. It all kind of links up. So be a great deal, but it's just harder to get, if you said, look, find me a 9 or 10% yield there, I think, unless you did the rent by the room, I think you would struggle a little bit. Yeah.
I think Tauranga is awesome, but I've had so many clients who've struggled to find anything they can buy there. They're beating their head against a wall, and Yeah,
because the rents aren't super high because you got a mix of retirees and younger people. So you don't necessarily have whereas Auckland, sometimes you'd have higher rents because you've got a lot of people in the workforce that are highly paid, so they can pay high rents. So And then you got the purchase price is typically higher because a lot of Aucklanders buy there as beach batches and stuff. So those two things work against you. It's not impossible, but you'd have to have a strong reason as to why you wanted to be in Tauranga. Because investment-wise, the numbers would make sense for you to be in a different regional centre.
Yeah, for sure.
If that makes sense, yeah.
Alexander asks, "Is Christchurch what's Christchurch like at the moment for good yielding property?"
It's good, but once again, booming. Yeah,
booming hard.
Christchurch it's one of the most livable cities. It's really hard to get cash flow deals there. There seems to be only 2 or 3 agents that sell all of them, and they put you into multis, and but it can be done. Yep. Absolutely. Yeah, so 380,000 people. 380,000 people live there, and you got the beach and everything. And yes, there was a quake, but the quake has meant that they've rebuilt the city
brand new.
More. It's awesome. It all kind of functions now. It's almost like you had a reset, and then it was like, let's just design a city how we would do it today. Steve was there the other day, and he loved it.
I absolutely did. Yeah, I was blown away. Yeah. I was expecting to like it, but what an amazing city. So much money down there at the moment. I literally I spoke to some really experienced property people while I was down there, and I said, well, why are you living here? And they were like, there's no money in Auckland anymore. I'm like, what? When did this happen? I didn't get the memo,
I think there is, but it's just the price point is high. So if you're sort of 500 to 600K, you're just really not going to get anything. You'd want to be 900 to 1.5 to get an asset that would really yield well, because then you're getting into the multi-units. So it's just a different price point. But yeah, I rate it. It's awesome. Yeah.
Well, here's one for you, Shane. Are you seeing any deals in Auckland with good yields, 6 to 7% and non-flood zones?
Yep. I had one the last couple of weeks and no one bought it. So pop me an email. Let's see if it's still around, and we'll put you into it. Yep. It's not in the flood zone. It's it was a 7% yield, 6.5. Yep, we could probably help out. Depends on your budget, which once again you'd need to be around 900K to find something like that. Unless you wanted a city apartment, then $50 probably. I think some of them are. What was your one? 22,000 that you were buying for leasehold?
No, it was 140,000.
You own an apartment, then I apologise.
So the person who posted this question, Shane thinks he possibly has something for you. So click the last property and go get info pack, but then type this question in and he'll come back to you with some thoughts. Yeah, let's go that way. Makes it easy. Mr. G. Singh asks, is there anything coming up in the Dunedin in the 800K mark which would have great cash flow? These deals are what we call fresh. We have them available. We have them available for a very short time, and they sell and they disappear, and then we don't. So the best bet would be to go onto Shane's database for all of the bulk deals that he has. You'll see the deal as soon as we possibly have it available to you, and then jump on his bespoke buyers list as well and tell him exactly what you want, and we'll see what we can do to help you out. I can't really tell you what we've got coming up, because as soon as we've got it, it's banged out to the database, and we can let you guys know about it straight away.
Send me an email on the website and just tell me that you're looking into needing 800K and you got finance approval, and we'll see if we can find you something.
Yep, good plan. All right, Shane, well, that's been well over an hour, and I thank you profusely. We've both worked really hard on this webinar the last few days, and tonight I'm glad everybody's, we've had some massive feedback, and I don't know about you, but my texts and emails have been going absolutely bonkers through the whole webinar. As I said earlier, the recording will be emailed out, and you guys can have another quick look through it. First in gets all the treats, though, so jump on there and put all the replies in and bits and pieces. Shane and I are going to duck out now and leave you guys to it, but we'll leave the webinar up and live for a little bit longer if you wanted to go back through the comments there, and the links, as we've mentioned, they're all still in the comment stream there. Help yourself to register your interest for any of the properties we've mentioned tonight. I'm cooked. I'm sure Shane is too. Thanks so much, guys. I really appreciate you joining us tonight, and have a great evening. Thanks so much.